What's happening, my real estate family? This is Norbert. I've got a big video for you today as news continues to pour in about mortgage rates. October has been crazy cruel to mortgage rates. We saw the conforming conventional 30-year fixed rate mortgage rise from the low sixes all the way up to 7%. Week ending Friday, October the 25th, the average conforming 30-year fixed rate was sitting at 6.9%, according to Mortgage News Daily's rate index. You can see on this 30-year fixed rate chart just how much rates have jumped in the past 3 weeks. This dramatic jump in rates has left many realtors and mortgage professionals wondering why. What's causing this to happen? Well, 3 potential factors could be contributing to this rise. Number 1, the U.S. debt has exploded. The U.S. added literally $600 billion to its deficit in just the past 2 months. You can see the spike in U.S. spending at the start of October here. Keep in mind that the more debt the government goes into, the more Treasury bonds they have to sell. That's more supply going into the bond market, and in turn, prices go down, and inversely, interest rates go up. Ouch. Second factor, better than expected job numbers and higher inflation numbers. Earlier in the month, we talked about the October 4th BLS jobs report and what an upside surprise the number was to the markets. It showed that 254,000 jobs were created in September instead of only 150,000, which was what the markets were expecting. It came with some huge seasonal adjustments, which the markets are like thinking, are they really accurate? But in any case, we also saw the headline CPI number increase by 0.2%. Both of these reports were viewed as inflationary and in turn were very bad news for mortgage rates. And last, the third reason, the bond market is probably experiencing some election-related fears. Probably you guys are too. Traders are trying to price in the effects of a Trump or Harris victory. Which candidate would add more to the national deficit? Which candidate could possibly push inflation even higher? These are some difficult variables that the markets are trying to handicap, and in turn, you're seeing the volatility as a result of it. Let's talk about how this could potentially impact sales. On the sales front, NAR released their existing home sales report, which measures closings on existing homes. It showed that existing sales nationally fell by 1% month over month in September and was down 3.5% year over year. That's on track for an annualized pace of only 3.8 million units for 2024. That would be the lowest sales volume in 29 years, ever since 1995. Here in the Las Vegas Valley, we saw a total of 2,271 existing home sales in the month of September, which was down by 460 units compared to August. This is a decrease of 16.8% month over month. How about active inventory? Well, active inventory without offers climbed to 7,896 properties on the market at the end of September, which was up 4.7% month over month and up 39% year over year. There is some seasonality to these numbers as inventory does tend to build after the summer months. The good news for our buyers is that competition levels are a little bit lower, and this has helped our buyers with seller concessions and also some pricing breaks. The last 4 closings that I had in the last 30 days literally all came with seller concessions towards my buyers' closing costs. Our agents are doing a very nice job of negotiating. What are your thoughts? What are you seeing in your pipeline? I'd love to hear. Put some comments in the comments section below and let me know. So what's next? Well, this week we have an action-packed week as far as economic reports are concerned. We will get the personal consumption expenditure report on Thursday, which, as you know, is the Fed's favorite measure of inflation. And then on Friday, we'll see the October BLS jobs report. Both of these reports will have potentially huge impacts on mortgage rates. I'm going to start praying to the loan gods today that these are both bond-friendly reports. I hope you liked this video. If you did, hook me up with the like below. Also, don't forget, subscribe to my channel so you can stay more informed. And as always, let's get better, let's close more deals, and I'll see you in the next video.